Today, we're diving into a huge shift in how people are thinking about Tesla. And look, this isn't about the day-to-day stock price. It's about why the year 2026 is shaping up to be this make or break moment that could completely rewrite the company's story. It really all boils down to this one single question. It's at the very heart of every debate about Tesla's future. Is it a car company or is it an AI company? And your answer to that, well, that changes absolutely everything. But before we can really look to the future, we have to get a handle on the present. And right now, Wall Street, the media, pretty much everyone is completely obsessed with one thing: those quarterly car delivery numbers. At the end of last year, this was the number that sparked a massive debate: 422,000. That was the analyst consensus for Q4 vehicle deliveries. And whether Tesla misses or beats that number, even by a little, can send the stock flying and just dominate headlines for days. It's a huge deal. Now, there's actually a pretty interesting story behind this number. When Tesla published it, a lot of people thought, oh, they're trying to lower expectations, send a warning shot. But the reality was it was a direct response to retail investors, everyday people, who basically said, hey, we want to see the same data the big analysts see. It was all about transparency. So, just as this whole debate over a few thousand cars was hitting its peak, this really powerful counter-argument started to emerge. Investor Alexander Mers just captured the feeling perfectly with this quote. I mean, she's basically asking, does a few thousand cars this quarter really change the long-term story? The point is, focusing on this stuff totally misses the bigger picture of where the real value is actually being built. And that brings us to the core idea of this whole explainer: a fundamental pivot, a huge shift in how Tesla is being valued. We're moving away from focusing on the physical cars and toward valuing the intelligence that actually powers them. This slide just lays it out so clearly. The old focus on the left, that's all about old school industrial stuff. How many cars did you make? What was your profit margin on each one? But the new focus, that's a whole different ballgame. It's about software you can subscribe to, a fleet of driverless taxis, and applying AI to solve real-world problems. So this suggests a complete flip of the business model. I mean, for years, the idea was you sell a person a car and then you try to upsell them on the cool autonomy software. But the new thinking is that the desire for true autonomy will get so strong that people will buy the car just to get the software. The car basically becomes the iPhone for the real product, the AI. Okay, so if the main goal is shifting away from just making as many cars as possible, you have to ask, where is Tesla pouring its massive amounts of cash and resources? And the answer tells you everything you need to know about their priorities. The company is deep in a heavy investment phase. In business speak, it's called CapEx, or capital expenditure. And this money isn't just going to more car factories. No way. It's about building the entire foundation for its AI and robotics future. We're talking about buying tons of GPUs for AI training, physically building out the robotaxi network, and speeding up the development of the Optimus robot. And this investment isn't happening in a vacuum. There's a whole geopolitical angle to this. Analysts are starting to see this as part of an emerging economic competition, especially with China, to see who's going to lead the next great technological frontier, which is looking more and more like robotics. Now, when you make a massive pivot like this, it has huge consequences for the traditional financial numbers we use to see if a company is healthy. It's literally forcing investors to learn a whole new financial language to understand what's going on. Just take a look at this. A year ago, Wall Street expected Tesla to earn $4.25 per share in 2026. Fast forward to today, and that estimate has been slashed by nearly half, down to $2.17. This is a direct result of all that massive spending on R&D and AI, which pushes down short-term profits. So if earnings are being pushed down on purpose because of all this investment, what should you watch? Well, analysts are saying this becomes the single most important number to look at in 2026, free cash flow. It'll show the real cost of building this future. And some argue that if Tesla can just break even, just stay cash flow positive during this intense spending spree, that in itself would be a monumental success. This quote just perfectly explains why valuing a company can seem so confusing. It all comes down to your time horizon. Are you a short-term trader who's looking at next quarter's earnings? Or are you a long-term investor thinking about what autonomy could be worth in 2030? The stock price today only really makes sense if you're measuring your timeline in years, not months. So what are the actual real-world milestones that supporters of this strategy believe will prove that this massive, expensive pivot was the right call? What are the key events we should all be watching for? Well, here they are. These are the kinds of events that could turn the idea of Tesla's AI value into cold, hard cash. We're talking about getting the green light from governments around the world for self-driving, showcasing a way more capable robot, and maybe the biggest one, finally seeing all those autonomous miles start to show up as real dollars on the balance sheet. And hey, don't sleep on that last point about robo-trucking. It's a really big deal. A lot of the attention is on personal robotaxis, but some analysts think that trucking, which operates in a much more controlled environment, just going from one big warehouse to another, could be an even bigger market, and maybe even an easier one to crack first. And that leaves us right here with the ultimate question. It really captures the incredible, high-stakes tension between the company's finances today and its wildly ambitious vision for the future. So, will 2026 be the year the AI bet finally starts to pay off? Or will it be the year the sheer cost of that bet starts to test the faith of even the most patient investors? The answer could redefine an entire industry.